Well, let's get back to the budget because, as you heard earlier, several economists are concerned about what was tabled on Tuesday, concerned about the capital gains tax and how the Trudeau Liberals are expanding what it applies to, and concerned about a financial plan that fails to address a path towards a balanced budget. To talk about this, we're now joined by Trevor Tombe. He's a professor of economics at the University of Calgary and a research fellow at the School of Public Policy. Trevor, good to see you again. Thank you for being here.
Great to be on. Thanks for having me.
Listen, let's start with the capital gains tax because, the criticism seems to be to expand what it applies to is to discourage business investment in Canada. What do you make of that?
So I think we should consider the change in the capital gains inclusion rate separately from the government increasing taxes on capital gains in general. Right? The main purpose of partially including capital gains when we receive them as individuals is because typically corporations have already paid the corporate income tax. And so this inclusion rate is about aligning how we treat capital gains versus dividends versus interest and other forms of income. And so that increase to 67 does mean now that capital gains will be treated similarly to other income sources. Now, one could prefer lowering taxes to compensate for that change. So it didn't need to be a tax increase, and I think that's where the concerns lie. Any increase in taxes on returns on investment will, at the margin, discourage investment. But that's not how we should view this inclusion rate change, which is much more about the technical structure of the tax system rather than necessarily about raising taxes.
Mm-hmm. Although, the languaging around it, the debate, at least in layman terms, seems to be much more about the raising the taxes.
No question.
Armine Yalnizyan is, of course, a well-known economist in this country, and she makes the argument that people benefiting on capital gains are not necessarily investing in growth and the economy, essentially pushing back on the criticism. She says they're just turning around a quick buck and withdrawing their investment before it can have any positive impact. What do you make of that argument?
So it certainly is a tax that applies to basically any asset. So you might be subject to capital gains taxes if you invest, for example, in cryptocurrencies that see their value increase dramatically or not, I guess, depending on the time period. And that's the type of investment where indeed it's not really about expanding the productive capacity of the economy itself. So there's certainly some types of capital gains where that critique is valid. And then when we're talking about increasing the value of companies by investing in new machinery, new equipment, new innovative products or processes, then that value is paid out to owners of those corporations. And what the inclusion rate change does is basically lead dividends and capital gains to be treated similarly. And so now the tax system doesn't bias decisions around how to distribute the value that investments create. And so in that sense, productive investments that are increasing the value of a company is going to be treated similarly to other income sources. And that's a good thing in the sense that a tax system ought not to tilt the scales towards one type of payout or another. And of course, we can have then a conversation around what's the right level of taxes overall. So I view this as something that broadens the tax base. And generally, we want to match that with lowering tax rates. Mm-hmm. And that's where a potentially valid critique of the government is at. The government opted not to compensate by lowering tax rates. But that should be viewed as a separate critique.
Mm-hmm. Separate critique, as you say. Now, quickly running out of time, but I do want to also ask another question, because there's still also this debate around the government's fiscal guardrails versus a plan to get the country back to a balanced budget. Are you bothered by the budget as it is, relying on this percentage of GDP as opposed to talking about a balanced budget? Because even if it's a percentage of GDP for a deficit, ultimately it gets added on to the national debt.
Yeah, and the measure of public finance and sustainability that economists turn to regularly is indeed the debt-to-GDP ratio. It's not something new to this government or unique to Canada. And the federal government's longer-term outlook is quite positive. Just structurally, federal revenues tend to grow more quickly than spending if left to their own devices. And so that means there's not a great deal of concern around federal finances. Provinces are a different story where there is some significant legitimate concern. But one could prefer lowering the debt to GDP faster than what the federal government is currently projecting, getting back to pre-COVID levels to prepare for the next inevitable negative shock that will occur. And I think that's fair enough. So I think one might, on prudence grounds, want to see a balanced budget more quickly, but I don't have any concern structurally about federal finances.
Trevor, always appreciate the insight on these things. Thank you for the time this evening.
My pleasure. Take care.
You too.